The simplest, most effective Fibonacci retracement trading strategy on earth. I'll show you exactly how to implement this with your trades step by step. So come to your trading view and click the Fibonacci retracement right here. If you don't have trading view, I'll link them below. It's completely free. Just go and use it. So Fib retracement, and then I'm choosing the Bitcoin USD chart right here to show you. Just click anywhere on the chart and draw the Fib, because we want to go to settings right here. And then you can choose this. You can screenshot this and take a note. These are the most popular Fib retracement levels, 0.382, 0.5, 0.618. These are the levels that I'm going to be using to see where we get pullbacks. I'm going to enter at those levels. We can use these for our pullback entries and stop losses for our trades as well. So these are the levels we're trading off. Fibonacci can be used on many different time frames. I'm going to show you on the day chart here as we just get slightly stronger data for a swing trade versus the lower time frames for day trading. So recent price history for Bitcoin as of making this video. Where exactly do we draw the Fibonacci at this point? You want to draw it from the low point to the high point in a swing. So where the price action actually shows us that it has changed and had an actual swing, that's where we draw. So very clearly we have a low point here in price. That low point turns into a massive swing to the upside. So with Fibonacci, what we're doing is trying to find good entry points within a trend. Now, this trend clearly is to the upside, and maybe we're getting an uptrend here. So what we can do is draw this from the low point to the high point in a range. So you can just draw this out. Now, what we have here from this low to this high, that is the swing. And now we can actually try and get our entries where the price draws back down to our Fibonacci retracement levels, which are these right here. So as you can see from this swing, this one that we measured, the price did draw down from that, but it didn't reach any of our Fib retracement levels. So potentially you just don't trade that, right? You actually wait for that to come. Now what we can see is that there's another impulse from that drawdown to the upside. So what we would do is actually take that again right here, because it's part of the same swing, right? So we're not changing the entry level for this part of the price action. And as you can see, we actually did get a drawdown from this into our Fib levels. And so these are actually the levels that we can trade and enter positions. Presuming that we are in an uptrend, we want to generally go long. These are the levels where we can enter trades in order to then benefit from more swings to the upside in the uptrend. From here, we can look for Confluence that these Fibonacci retracement levels are actually something we might want to trade. So the Fib levels are good, but let's get another indicator to show, are these price levels something that we actually want to go ahead and trade with? So something we could use is a support and resistance level. Now we can use a line, or we can just use a general area. So what I can see here is that the Fib levels around here are, around, let's say, the 20,000 level. If we go back, we can see there is a big support and resistance zone where a lot of trade happened around here, right? So there's a lot of trade around this level, which means that traders are happy to trade here. And what we want to do is find out, is this something we can trade? So we've actually broken through all of this to the upside. And so clearly, if we have a drawdown, we're in the Fib levels and we're at this very heavy area of trade. So that gives me an idea that actually this price level is somewhere that we would bounce from if we are in an uptrend, right? And so this is somewhere where you could actually make entries. If we consider we're in an uptrend, that's where it would bounce from, right? These other areas where a lot of people have traded. So that gives us confidence that this area is something that potentially is a tradable level, given that we assume we may be in an upward swing in price momentum. So Confluence here that we've actually got two indicators now, or at least we have one indicator and the price action showing that this may be an area we can trade from. I want to show you exactly how this worked in the previous bear market and then how it is also working within this upswing that we're having as of making this video anyway. So this is the previous bull market. And as you can see, there are areas where Fibonacci would have worked. So we have an upswing here. This is, a top here and a drawdown. So a low before a big impulse to the upside, right? So let's see if Fib is actually going to work right here. We have the low and then a huge swing to the upside. Now, let's say you missed out all of this, right? And it just, didn't retrace, and so you couldn't do it. We now have a retracement. As you can see from the low to the high, we get a retracement within the levels. So that is an area where we could have actually entered positions hoping for another impulse to the upside. You can see here again from this, so we have this drawdown, that was the low, and we have an impulse to the upside. That impulse stops here and we get a drawdown. Again, that comes into the fib retracement levels, somewhere where we can enter a position. And let's go again. We have this one into an up cycle right here. And we have the retracement levels showing us that these are potentially areas where we could enter, moving forward into the uptrend again. Now, importantly, let's do that again to here, a low to a swing high. And as you can see, we have fib retracement levels. Now, you might have got into some trades right here, and this is where you would have got stopped out of your trades. So you had 1, 2, 3 trades in a row, which were perfect, and then we get stopped out. That is day trading. You are going to lose and get stopped out sometimes. You can see now that we've actually gone into a lower low. So we have the uptrend here. We have a low and a higher high, and then you'd expect a lower low and then to bounce, but it didn't. It actually gave us a lower low. That was the end of the bull market, the end of the uptrend. Later on in the bull market, it did actually come back up to this level, but you can see the trend here ended at this point. So at the end of the trend, yep, we would have taken a long position and got stopped out, but we've had 3 good trades, 1 bad trade. That's actually pretty good for day trading and swing trading. So that is when we stop and reconsider our strategy. But Fibonacci worked on 3 occasions in a row to actually get this uptrend. So it doesn't matter the price levels. What you're looking for is uptrends with higher highs and higher lows. You're getting these pullbacks and you're using Fibonacci to get those entries. From here, I'll show you exactly how traders would enter a position here on a trading system. So we're going to use our Fibonacci again. So fib retracement, I'm using Bybit here. They have fib levels as well. So we're going to go from a swing low to a swing high. I'll link Bybit down in the description as well. If you're new, you can get up to $30,000 as a deposit bonus. If you do trade crypto, you can just sign up deposit trade, you get 30K there. Bybit's not available for everyone. You can also use Apex as well, which is Bybit's on-chain exchange. So if you're familiar with crypto, you use your own wallet like MetaMask or something, you can just trade directly on-chain. You don't have to put your assets into a centralized exchange at all. And you can day trade here, with crypto futures. So it's Bybit's on-chain exchange. But in any case, you can find out the details below. From here, we can go to Fibonacci, and then we have the swing low into a swing high. Now from here, there's 2 things you can do. You can either enter at the 0.5 level and just say, when we get retracements to the 0.5 level, that's when I go in. You can also choose the 0.618 level if you want, or the 0.328, it's up to you. But let's just say 0.5 is in the middle. We can say when the price gets down here, that's when we enter our positions. The other thing you can do is actually split your entry 3 ways, right? So into thirds. So if the price gets down to the first fib retracement at 0.382, you enter a third of the trade. If it comes down into the 0.5, you enter another third. And then if it comes down to the 0.618, you enter another third, right? And that splits up the trade because we don't know exactly where things are going to retrace. There's pros and cons to both, because if the price comes down and moves up and you've only got a third of your trade in, well, you missed it. If it actually comes down here and you put, most of your trading up here, then again, you got a worse entry. So again, it's kind of swings and roundabouts, but you can make your own decisions here. Once we've got our entry, now we can put our stop loss and take profit levels in. So what we can do is come to a long position here, it's on the left-hand side, and then say that our entry was around here. So our blended price, let's say, was this. Now, if we had waited for this level as well, we would have actually only got 2/3 of our trade in here, right? We got this level and the 0.5 level, but it didn't draw down here. So we've only got 2/3 of our trade in. So again, you can make decisions here if the price pumps a little bit. Maybe you just want to enter the last third of your trade or whatever, it's up to you. But to keep it simple, we have an entry here at this level. Let's make it a little bit of a worse entry. And then we have a stop loss price. Where should your stop loss price be? Well, if your entry is here, you want it below this 0.618, right? Because that is a retracement level. So you want it slightly below that. For me, if the price moves all the way down below this, it's becoming not a retracement, but more of just a sell-off, right? And so that we're potentially getting into the wrong side of the trade at that point. So from here, we can have that stop loss around this level. And then we would want a take profit level. Again, this is up to the individual trader. Do you want to take profits quickly? If you pump, you can look back and say, are there support and resistance levels where the price is actually meeting resistance? And so do we want to put our stop loss right about here? Do you want to wait a bit longer and see if the price actually moves up to the previous resistance zone, which would be this one, right? So you can take profits there. Or if you're in a big uptrend and you think the whole market is going to move into a big uptrend, you just want to get your entry and then wait for some other major price level where you think it may get to. So there's 3 ways to do it. It's up to the individual. Let's just say we're going to move for a fairly long-term swing trade somewhere slightly below the previous resistance. So that would be our entry, our stop loss, and our take profit. And you can see on the right-hand side, we have that now. Our entry in gray, stop loss in red, and our take profit in green. Now that we have our stop loss level, we know how much leverage we can take in our trades. I can't recommend leverage, but I know a lot of people day trading in crypto use futures and leverage on their exchanges. Well, we know right now that our entry is this and our stop loss is this. That is let's call it 8.5% move. Round it up to 10%. That means 10% is our potential downside. That means we know we cannot use more than 10% leverage if you're just leveraging up a big trade, right? Because 10% leverage, if you're 10x leveraging $1,000, you've now got a $10,000 position. 10% move on that is $1,000. It wipes out your entire account. So we know we can't use 10x leverage. That's too much. We need a liquidation price below our stop loss price because we don't want to get liquidated. We pay more fees, right? So we don't want to do that. So we go to leverage, and we just use 5, 6, 7x leverage. That is fine because it's within our stop loss level, right? So we don't want to get liquidated is the main thing. If you want to know way more about using leverage and really what it entails, I'll leave some free videos down in the description as well. The Crypto Investor course goes through the entire thing as well if you want to get a bit more professional. But from here, we're just going to open a position. So whatever that may be, take profit, stop loss. We know the stop loss price is around 23,645, something like that. So you can very easily put that in, right? 23,645, right? And then the take profit, again, you can put that in at, what is it, 30,000 or 29,850, something a little bit below that, right? And that would be your entry and exit in a long position. So that would be the entry, stop loss, potential take profit, your entry with the Fibonacci retracement level. Using Fibonacci to day or swing trade is inherently risky, of course, but at least it gives us a firm yardstick of if then. If we retrace, then we can enter firm positions with stop loss and take profit levels. And of course, then we just need to know, are we in an uptrend or a downtrend? And that's fairly obvious by the way the market is trading at the time. You can use on-chain analytics as well for crypto to actually know this as well, including Bitcoin cycles. That's for other videos. I'll link lots of helpful videos and tutorials down in the description as well, including the links to Bybit if you want the deposit bonus and Apex as well. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.